Just recently, the first ever Bitcoin dividend was announced by a company that trades under the ticker symbol BTCS. And this has just been a retail frenzy with lots of retail investors piling into this stock. In today's video, I will be explaining this Bitcoin dividend, what it means, the impact it'll have on shareholders, and also why I'm actually quite concerned about this Bitcoin dividend, or Bividend as they are calling it. I'm going to make my intro pretty short here so we can get right into the good stuff. But first of all, if you guys are new here or returning not yet subscribed, I would greatly appreciate you hitting that subscribe button down below, and also comment below your thoughts on this Bitcoin dividend. Do you think it's a thing that's here to stay? Do you think it's a good thing for shareholders or a bad thing for shareholders? Let me know all of your thoughts in the comment section down below. I also want to preface this video and just say that I am a fundamental investor. I invest on fundamentals, not hype, not technical analysis or things like that. So in making this video, I am a bit biased in what I'm about to say, but I'm going to break down the fundamentals of BTCS and why I think this is a very dangerous idea for the company and even the industry. So at times in this video, you're going to think that I am absolutely tearing into BTCS, and well, I am, but I want you to know that any other company, if they were in BTCS's shoes and starting to offer a Bitcoin dividend, I would tear into them too. So don't think that I am just solely attacking BTCS. This goes for any future crypto related companies that feel the need to do a Bitcoin dividend. I don't think it's smart, and let me explain to you why. On the screen now, I have the press release where BTCS first announced this Bitcoin dividend. And if you're still unclear of what a Bividend is, it is exactly a dividend that is payable in Bitcoin to shareholders. It's a revolutionary idea, and ultimately it got a lot of new eyeballs on the company and stock. So if that was the management team's goal, well, I applaud them because they succeeded in getting new attention on their company. And the reason I say this was really a retail frenzy is because as soon as this press release was released on January 5th, the stock price of BTCS absolutely soared, and year to date, it's up over 120%. You'd be extremely hard-pressed to find another stock out there in the markets that has already returned 120% to shareholders this year in 2022. So it's pretty remarkable. But this is entirely retail investors buying into the hype. This really isn't big money and big institutions that are buying up this stock. The reason I say that is because of the size of the dividend. If we go back to the dividend, we can see that the company intends to pay 5 cents per share in Bitcoin. Now, if we go to the Yahoo Finance page for BTCS, we can see that they only have about 10.28 million shares outstanding. So if you do the math, 5 cents per share in a dividend, they're only giving out about $500,000 to their shareholders. And, you know, that doesn't seem like a lot, but when you dive into the fundamentals, it gets really worrisome. And before I get too deep into this, I do want to go back and walk you through the process of how shareholders can claim their Bividend. Basically, they give you a link in this press release telling you to go to their website, Bividend.com, and this is what the homepage looks like. If you want to claim your Bividend, well, you just hit this big orange button at the top here that says Get Your Bividend, follow the steps, and you will get that Bividend deposited into your account. Again, I think this is a revolutionary idea. I just don't think it's the proper time for it, and I don't think this is sustainable, and I honestly worry about BTCS shareholders because people forget that whenever dividends get paid out, companies are paying out a portion of their assets. So the net asset value of a company goes down whenever they dish out a dividend. It's no different with a Bitcoin dividend. BTCS's share price is going to drop just on that fact alone because they're dishing out those assets and they no longer own those assets. They belong to the shareholder. So naturally the share price will fall as the market cap of the company also falls. But the second reason I'm really worried for shareholders is because, again, this was a big retail frenzy. Retail investors are buying like crazy into this because of the hype surrounding this whole situation. And anytime something like this happens, people try and outsmart the market. And they think, oh, I'm just going to buy up the stock shortly before the Bividend gets paid out, and then I'm going to sell out immediately thereafter, and I'm just going to be able to pocket the gains. But again, people forget that the share price drops whenever a dividend gets paid out because the company is paying out their assets, decreasing the value of the company. And those two things make a big mess, in my opinion, for shareholders. Now, let me clarify why I think this is all retail investors and hardly any big money managers or institutions that are buying up this stock. And it all has to do with going back to that they're only planning to pay out 5 cents per share in Bitcoin. And we already covered. They have just over 10 million shares outstanding. They're paying out $500,000 to shareholders as a Bitcoin dividend. Big money managers and large institutions, do you think they're really worried about getting their cut of this $500,000 that BTCS is handing out? No, because they already have the option to buy the Grayscale Bitcoin Trust, for example, or an ETF to get the exposure they need to this asset class. This is entirely retail investor driven, and I think it's very, very dangerous. And I've noticed whenever retail investors try and buy into hype, bad things happen and they don't look at company fundamentals. And no smart investor, no investor that knows what they're doing is going to be buying into BTCS stock because their fundamentals are atrocious and they have no business paying out a dividend to shareholders. Let me show you why. On the screen now, I have the company's most recent quarterly report, and we can see that over the first 9 months of the current fiscal year for the company, they've only done $775,000 in revenue. Thousand, not million, thousand. And this gets even worse when we scroll down and we see that they lost $15.5 million coming up with this $775,000 in revenue. That is horrible margins. This company isn't even close to profitability. And this is why I think this Bividend is just a gimmick to get eyeballs, which again, if that was the management team's goal, applause to them because they certainly have done so. But the fundamentals of this company do not line up. As a growth company, like BTCS should consider themselves as, you don't deliver profits to investors via a dividend or a Bividend. You deliver profits to investors via reaching positive EPS or positive earnings per share. And this company isn't even close to that. And it gets even worse. This company has an accumulated deficit of $135 million. When they're doing $775,000 in 9 months of revenue, but they have $135 million of accumulated deficit, that is atrocious. So naturally, you may be wondering, okay, where is this company coming up with this money to pay out this dividend? Where are they getting money to grow their business? Well, those are all smart questions, and the answer is dilution. Seriously, last September, and I'll search this up in their recent quarterly report so you can see I'm not fibbing this, they entered into an at-the-market offering agreement with H.C. Wainwright to offer up to $100 million in shares. Keep in mind, the value of this company right now is only about $50 million total. So they have the potential to dilute shareholders at 2 times the current worth of the company. So in my eyes, a company that is entirely reliant on offerings and dilution for their cash flows, they have no business paying out earnings or a dividend to shareholders. It's simply not sustainable, especially at the horrible margins this company is experiencing right now. And honestly, this is quite sickening to me because if we go to their investor presentation, the management team tries to convince us that they are undervalued compared to their peers. I'm sorry, but you cannot convince me you are undervalued compared to your peers when you have $775,000 in revenue in 9 months in the current fiscal year. Who cares how much cash and crypto you hold in relation to your share price, which is how they came to the conclusion that they were undervalued in comparison to their peers. You can't do this as a management team. This is a scam. This is almost fraudulent. Sure, when you take your share price and divide it by your total cash and crypto, you might be undervalued. But you're probably undervalued for good reason. That's because you don't have a sustainable business model. These other companies, Marathon, Riot, CleanSpark, they have established business models and they are on the brink of profitability. They're bringing in millions and millions and millions of dollars in revenue every single year, every single month. And right now, your company is only bringing in $775,000 over the past 9 months. You cannot claim that you are undervalued compared to these other miners when that is the case. When you have an accumulated deficit of over $130 million. When you spent $15.5 million to come up with $775,000 revenue, you cannot do that. You cannot say you're undervalued until you get those things figured out. And this is where I come back to my conclusion that this was a horrible business decision for this company. This dividend is not sustainable. Sure, you may have gotten new eyeballs on your stock, but guess what? As soon as that dividend is paid out, your stock price is going to crash like that because people are going to try and time it out and rake in that Bitcoin as a dividend, and they're going to sell out immediately after receiving that Bitcoin. I guarantee you right now that's what's going to happen. And guess what? As your share price falls due to your dilution and due to paying out the assets of your company, at a certain point, you cannot dilute any further. Let's say you put an additional 1 million shares into the markets at your current share price of $6.88. Well, you're going to raise $6.88 million for the company. But what happens when your share price falls to $2 or $3? Well, all of a sudden, those 1 million shares that you're diluting and putting into the public markets is only going to raise you $2 or $3 million instead of the $6.88 million that it's giving you right now. And the fact that this company only has just over 10 million shares outstanding, you know dang well that dilution is coming for shareholders, especially with how unprofitable their business is. And this is just astounding to me. The people that buy into this crap. I'm extremely worried right now that this is not going to end well for shareholders of BTCS. Because they don't have a sustainable business model. This dividend is idiotic by the management team. It's honestly a gimmick in my eyes to get eyeballs on your stock price. And more than likely right now, they're using this momentum to dilute shareholders and issue more shares and put them into the open markets to raise more cash. And guess what? They need that cash as cash flows to sustain their business model. A company that requires dilution for their cash flows of their business has no business paying out a dividend to shareholders. Also, as an investor, if you're contemplating buying into BTCS, you have to contemplate the fact that, hey, maybe another crypto winter is going to come. And what happens to this company if a crypto winter comes? This company goes bankrupt, plain and simple. They're going to go bankrupt. And right now, let's just say they finished the current fiscal year with slightly over $1 million in revenue. Well, currently the company is valued at $70 million. The valuation for this company is 70 times revenue. 70 million market cap divided by the $1 million in revenue. Keep in mind, the revenue is not even close to profitable. 70 times revenue is the valuation being put on this company right now. And the management team is trying to convince investors that they are undervalued compared to their peers. You've got to be kidding me. Show me a single other one of these names that is trading at 70 times their revenue numbers. There isn't one. This is ridiculous. And the fact they include this in their investor presentation is extremely concerning to me. And in my eyes, this is a gimmick. But I want to review. I'm not meaning to just attack BTCS because if crypto succeeds, BTCS is probably going to succeed. And if crypto fails, well, BTCS is going to fail. But the bottom line is the same catalysts that impact BTCS's share price also impacts all of the other crypto-related stocks in the stock market. And if any of those players decide that they want to start paying out a dividend, well, I'm going to be just as concerned because right now, in the current environment in the crypto industry, no company has any business paying out a dividend to its shareholders. This is something that management teams could potentially contemplate 5 years from now or even 10 years from now. Now is not the time. Now is the time where you need to be reinvesting all of your cash to grow your business as big as you can. So BTCS, if your management team is watching this, I'm sorry, but you are not undervalued compared to their peers. I think you're making a big mistake paying out a dividend when you brought in $775,000 in revenue over the past 9 months and spent $15.5 million to do just that amount in revenue. No, you're not undervalued compared to your peers, and you have zero business paying out a dividend when you are that far away from profitability. And honestly, it's sickening to me that you're including this on your investor presentation because the bottom line is investors more than likely are going to get burned in this stock, especially the long-term investors. And let's review. The reason you paid out this dividend, according to you guys, is because you wanted to reward your long-time shareholders. Is this really going to reward them when the share price is probably going to tank? Is this really rewarding them when your net profitability is this horrible? You're paying out $500,000 total in dividends, for gosh sakes. You're not rewarding anybody by doing this. And this is concerning to me, and I really hope other companies in this space don't follow suit for at least another 5 to 10 years. But anyways, I know I ranted a little bit in this video. This stuff sickens me when I see things like this, and retail investors buying into the hype without doing any of this fundamental research. The bottom line is, fundamentally, BTCS is a horrible stock, and it's probably a horrible investment. I never wish ill will upon public companies or its shareholders. I want everybody to succeed. But in this scenario, I see almost a 0% probability that anybody succeeds right now. You know, I hope they succeed. I really mean that when I say that. But with that, I'm going to leave this video here. Remember to comment down below what your thoughts are on this entire situation. Let me know if I'm crazy. You know, I'm always open to hearing other thoughts and theses out there. And, you know, I'm open to changing my tune on this whole situation as well. If somebody can convince me that this is actually a good idea for the company. But anyways, with that, I hope you have a great rest of your day. Leave a like down below if you enjoyed this. But with that, I'll be back with a brand new video later this week. Peace out.